Good day, all. Ira Epstein of Linn & Associates with your weekend edition of your metals update. And this is for Friday, the 20th of March, 2020, and we're after 4:30 p.m. Chicago has just received its stay-at-home notice, which means we're not going to be in the office, so these are going to look different. I'm going to record each day, but I'll be doing it after the markets like I do these from home. You won't see my pretty face. I'll just do a voiceover on them and bring up the same charts for you, so don't go away. We'll be there to cover everything. We're in a pattern that I've talked about over and over, especially in my paid subscriber people that I write for each day and that I put out my morning subscriber and afternoon ETF spider video for. And the pattern has been that everything changed February 19th. Up until then, when the COVID first came out and we first heard about it in early January, it was China's problem. And we'd hear about this thing, we didn't pay attention, we'd get some economic data that didn't look maybe necessarily so good. The market didn't care, it just kept roaring to new highs. And of course, we kept hearing how it's just going to keep going, and valuations, it doesn't matter if they're 20 to 1, 21 to 1, they're going higher, the price earnings. Okay. The gold market fell, as at that point, why own a non-performing asset that doesn't pay interest when the stock market between dividend and price was in a runaway? That all changed on February 19th when somebody turned the switch and the world realized this COVID-19 is going to Europe, and then it started showing up on ships and people that wanted to come to the U.S. shore, and boom, we're fully in it. Right now, you have to watch Italy. We have a timetable that we can study with Italy. That's what scientists are looking at. When does their situation peak? You've seen California, New York, I think New Jersey, Pennsylvania, now Illinois. We're all going to shut in, and that scares people. The pattern has been that market's been coming down Sunday nights, and I'm talking in financial markets, hard into Monday morning, getting something of a Tuesday bounce, maybe playing around Wednesday, Thursday, and then Friday, people by the end of the day are preparing for that cycle again. Today we had triple witching, the first one we've had since this began, and you could see how it ended up. Terrible as everything came down, and now we've got to go through the news, and it's not going to be good news. It's going to be bad. Yet the gold market's under $1,500 an ounce. Figure that one out. When you go to the monthly chart, it's still in an uptrend. You have higher lows as measured by the swing line, higher highs. And by the way, all of these numbers are taught in my charting course, and if you're a subscriber to my morning subscriber video, we've offered the course now at almost, I think it's a 40% discount. We know people are going to be home and they're going to want it. We just about, people are buying them. What more to do than spend, it's a 5-hour course. You got all these videos, you see what I do, you do the same, then you join me in the morning to see what I'm talking about, and it starts coming together. So I put on each chart Bollinger Bands, 100-day average in this chart. There's more averages in the course and what I do in my morning subscriber video. The 18-day average, and momentum. I have more lines than these because I use window envelopes as well. 5 pieces to the study. Each one filters the other piece. What you're looking for them to do is fight each other so you don't make a trade. I know that sounds crazy, but that's what you're looking for. When they don't fight each other and they say make the trade, you make the trade. That puts the odds better, as I see it, than the other way of doing it. Anybody can throw a dart out there for a buy or sell. If this market takes out this low all the way back here, I'd then get concerned, 1450, 830. But all it did is get all the way up here to the 1700 plus level, and this is your pullback. Let's assume it takes that out just for the sake of discussion. So you leave the uptrend, but are you in a downtrend? No. All you'd have then is if you will, look at this, a lower low and a higher high. Any way that I cut it, I see support coming in the market right here from the 1400 to the 1341 level. And no, I'm not saying it has to get there, but that's where I see support. There's divergence in the chart. On the momentum on the weekly, the slow stochastic's pointing down. The bias is up since you're over the 18-week average. And I always have a moving average, be it the 18 of the monthly, weekly, that if you're over it, you have upside bias, under it, bearish bias, and it filters swing lines. So the swing line's still up, the bias is up, but you've got momentum pointing down. On the weekly chart, the trend to the upside ended when you took this out right through here. So the key was, on a closing basis, not to take out 1564. If you did, you lose the trend. And the first spot markets often go to is an 18-day average to try to figure out what to do next. Market went there, and since then, it just fell another week. So I'm waiting to see on the first test of it, what does it do? But now the bias is down on the weekly. On the daily, on the weekly chart, just a bar chart with nothing on it, you see how the market, if we come back here, you don't want to get through these current lows. And when the market did, that put the market in jeopardy. This is the last break low area, the 1450. You're back to it. Sometimes no studies on a chart help to see things. You can also see on the swing line, you're not trending. On the weekly, you have a higher high and a lower low, which is different than the monthly chart, which makes sense as the monthly's lumbering along this a little faster, and the daily chart's even faster than that. If the market falls further, the 100-week average comes in here at the 1360 level. Okay, so if you really want to press the gold, that's a possible number. And in front of that's the lower Bollinger Band. And my theory is the first time you hit a Bollinger Band on the upside, downside, that's where pros often, if they're one way in the market or not. If they're short, that's going to be a cover zone. If they're long, that's an area that might take some money off the table. And momentum is down. So let's discuss this. The market closed under the 18 weeks, so the bias is down. Momentum is clearly down, and you're not trending. That's where the market's at. In the gold-silver ratio, it's a runaway to the upside, and typically you don't get bull markets that go anywhere in metals without that gold-silver historically moving in favor of the other base metals coming up. Why would base metals go up in this COVID-19 situation in Europe or America? We're closing all the factories in Europe and America. Tesla's now closing. Factory after factory. Those that are open, like GM and others, well, they have to convert over to be making these ventilators and other products that the government has the right to have them do. You're not getting things built. So why would the demand for silver or copper go up? It's not. And they're coming down. It's the logic of what does an industrial metal do, and this has been a collapse in that price as copper has done the same thing. Copper was the easier one. It's called Dr. Copper. Silver didn't do that. Silver first got up to the Bollinger top, ran out of momentum, and then came right through this. It changed and lost its trend right here. And then from there went into what I call panic selling at that point. Copper, on the other hand, has, without this whole break here, let me just come right here, had lower highs, lower lows. It's been underneath the 18-day average. It's been trying to push on the lower Bollinger Band with momentum down. It's called Dr. Copper for a reason. And the reason traders give it that name is because it often leads the industrial sector, and this was your first breakout this week. This is this week what the market did, but it had been in a downtrend. How could platinum and palladium possibly hold up with that? Boom. Let's go back a week. This is what you looked like. You now have lower highs, lower lows. You got excessive right away. You got under the Bollinger Band. I'm the first to say that. I would have thought here's where the pros were covering shorts, the combination of the 100 and the lower Bollinger Band. And then the market let go, and this is the panic that you're in because what's the need for it? How many cars are we building right now? I don't think many. Dollar. So we get to the point where everybody wants the dollar, then they drop it, then the dollar takes off. And this week we got up here and we're over that Bollinger Band by a little bit. But remember, the world's been scared because so many transactions are done in dollars that in foreign countries they can't get dollars to settle things. The Fed this week stepped in and bought $322 billion worth of securities. They're putting money into all kinds of instruments and coordinating with central banks to make sure that they'll have dollars. Is that a reason to be bearish? No. The dollar's also up because what economy is better equipped to handle this than the United States? On the other hand, those countries that are getting behind this, like Japan, Korea, China, they're at the other side of this virus, which is a good thing, not a bad thing. By the way, that's how I keep my news on the chart. So I keep talking about what I do in the morning. And this morning I had one heck of, I think, a good video out there. I was very aggressive in the markets. I'm not going to tell you which ones. I am going to say I was saying, do this, do this. This is what I think you can do in this market for today. And you take it from there. But I'll start you off each morning with my cup of coffee. I wish you were there to get it because I would pour it for you, but I have it right next to me like that. And I start reviewing charts. Now, they look different than the ones here. They've got this background. There's way more studies on them, as you can see, than on the other. More moving averages, window envelopes, 5 different indicators. But I'm going to review these charts in a certain way each day, and we start off talking first about what's the news of the day, the fundamentals, what's going on in Asia, what's happening in Europe, what's the COVID situation right now. Then, if I think there are things to do, not only do I tell you, I show you why I think that's a point of entry. Here's the exit. Here's where I'm wrong. I always have to have a spot that I'm wrong. And the objective on the chart. I cover them in a certain way each and every time. So the sectors come out, and what I do that for is you're able to keep up with them. Maybe you don't want to trade stock indices. Maybe you just want to go to the metals. Well, there's a slide bar on the very bottom of this. And when you pull it, it'll light up to the point where you get to metals. It tells you the section you're in. Each video is about 20 minutes long. A lot of work. I start recording 5:30, 5:40 in the morning, Monday through Friday. And yes, with the COVID, I'm going to be doing these. And I'm giving you what I think is the trade idea. So I want to be paid for that. $7.95 if you haven't tried it. I don't think it's even a tick in most markets. That's for 30 days. If you decide you want to stay, there's no contract. $15 every 30 days thereafter. But I'm adding to it. If you're a subscriber, my normal charting course that is $179.95, at the end of the video, you get the password to put in the coupon, $99.95, includes all my research. You get the written, everything else, and I am even giving several weeks of my Spider ETF video, which is a pay-for video starting in April, and that comes out about 4 in the afternoon. So, how do you get it? Go to www.iraepstein.com. Under the word research, morning subscriber video, explains it, and you sign up there. Hope you do it. I'll see you on Monday. I will be there. You take care.